welcome, everybody. We are back. Your friends at the Legacy Wealth Capital Group.
We don't play that because it's like we don't care what's going on. We make it happen.
The office pretty much depended on us. If we didn't work, the office didn't work, basically. It couldn't function without us.
I think about like what could we have done different?
And you could follow that model with your product.
Your service will not sell because people are going to feel that conversation. Welcome back, everybody. Me and my main man Kyle are here tonight. We don't have our partner Sean. He a little down. He had to say he gonna take a little nap on us, but we got a great conversation. Can't talk about why he ain't here. We got a great conversation for you guys tonight, and I know it's a little late, but just hop in with us. The topic is really, and we're gonna cover a couple of things. We're gonna talk about the data race because we hear a lot about data centers and they're building them, spending billions of dollars. They're talking about putting them in your homes. They're talking about putting them in your laptops and turning your laptop into a data center. So we want to talk about that from a perspective of how does that affect you and what side of the table are you sitting in? Then we want to talk a little bit about the SpaceX IPO because that's getting a lot of hype. And we want to really break down again where true wealth is built and how true wealth is built. So, Kyle, how you feeling tonight?
Man, you know what? I want to tell you times that I'm feeling good, but I just took my picture, right, for my new driver's license. And the lady told me my hair was gray. I'm like, what? Hold on, wait a minute. I still got some black up in there. She said, I'm sorry, sir. We can't say salt and pepper. So I got a driver's license with gray hair. I'm like, oh my goodness.
Oh, she put gray on the license.
Yes. I'm officially old. I'm like, what?
Just called the season.
She said there's more gray than black. So that's why I don't have my hat on today, y'all. I wanted to show y'all. I wanted to do a survey. I want y'all to help me out. Would you help me out? Would you say salt and pepper on the license, or would you guys put gray? So just let me know.
Just drop that in your chat. We'll see it. I think I'm going with gray because it's hard. I got to squint to see that little bit of patch of black. It's like you got a little black swipe in there.
Oh man, I was hurt when she said that to me. I was like, oh my goodness. I think I made a date. She was laughing, but I was hurt. So yeah.
Perfect.
I'm gonna dye my hair, so I'm gonna mess them up.
No, don't do that. Don't start getting out there on that Rogaine. That's what it is.
Yeah,
Men's first, whatever that stuff is. I ain't there yet.
Right.
All right.
I'm doing good. I'm doing good.
Let's get into this data center conversation. So, what really piqued my interest, of course, we hear it on the news. People are arguing about it. You know, certain states and counties don't want large data centers in their backyard, talking about the pollution and the water usage and the power, driving electricity up, all those things. But when we think about as consumers, everybody want to use AI. Everybody want to use ChatGPT, Claude, all these other tools. Where do you think that processing comes from? So you're a consumer and you're the driving force for the existence of the data center. They wouldn't need it if we didn't need the computing power. So you got to think about it like that. Every time you use ChatGPT, Claude, Gemini, Grok, whatever, every time you use your favorite flavor of an AI tool, you're contributing to the need for data centers. Now, all that aside, a couple of weeks ago, Kyle, I went to Black Wealth Summit. It was a conference. There was a guy there talking about market signals. And I really didn't think about data centers until he said they're talking about putting them in space. And I'm like, why are they thinking about putting them in space? But his point was, when you think about investing and being a part of a movement, you have to look at the signals. The signals usually follow when they're talking about something that's just crazy. Like putting them in space. To me, it's crazy. Maybe other people know they're in that game, they know a little bit more. But I'm like, why would they put them in space? And now we're seeing the billions of dollars getting spent. We're seeing the rate at which they're getting built. And now the new signal. They want to put them in your house.
Mm.
They want to turn it into your laptop. And they're creating these mini ecosystems of data centers because of the computing power, and they can't build it fast enough to handle the demand. And there's all kind of data out there about how many megawatts and gigawatts of energy we're going to be using, and just the speed and rate at which it's developing. But we had this conversation earlier today about just data centers in the home and being able to control your own resources.
Mm-hmm.
Because right now, we surf on the data layer. We're using AWS or Microsoft Azure or Google or whoever you're using as your cloud storage provider, and transversing across the networks. You're using somebody else's tools and you're paying for that. You're paying for your tokens, you're paying for all of that. When are we going to get to the point to where we start being moving from being a consumer to being an owner of this infrastructure and data layer, and being a producer? So Kyle, I wanted you to talk a little bit about some of the opportunities that you see and conversations that you've had that actually gives us an opportunity to be right in this space.
Yeah, that's good. That's good. You know this this topic, man, um, is really really good because I've been on data probably for about 8 years, and I remember I was talking with somebody, and they said data is the new gold rush. They said so. It ain't about gold, buying gold or whatever. It's not about crypto or things like that. It's data. If you have data, or if you can sell data, or you can control that, then it's the new pioneer. And I was looking at what a new frontier, and I was like, wow, what in the world? And one guy said to me, we were talking about mobile apps back in the day. I was sharing with people. Matter of fact, when we first started talking, I was sharing with people on the team. Hey, look, you know what? If you have a business and you don't have a mobile app, you're it's kind of like the .com arena back in the 2000s. If you didn't have a website, and remember how much a website used to cost back then, $25,000, $30,000 when you first got started. Well, just like mobile apps, how much do mobile apps cost? $20,000, $30,000, and probably in probably about 5 or 10 years, the mobile app's going to be free. Just like now, you can get a website for what Wixie or something like that. But however, even though that mobile app will probably be free, you're still going to have data on that mobile app. And that's what's going to be powerful because, and you maybe brought up a statement too earlier when we were talking about there's two forms of data. So let's make sure our consumers, or our people that are listening with us right now, our listeners, are not getting mixed up with what we're talking about, because you got your personal information data, your bank account information and things like that, and your what you pay your bills and your credit cards and all that kind of stuff like that, your mobile phone. I guess you can call that what, consumer data. But what we're talking about is the Watsons and the AMS, AWS and things like that. That data, where you're using the clouds, you're using your Facebook and your Instagram and everything, and all that is running on that type of data. And again, think about it. Even Google right now, when you go to Google, it's not even regular Google anymore. That's AI powered. So all of that energy, um, it's like if you can't harness that, and are you on the other side where you actually are a provider of data, or are you just a consumer of data and using it? So that's what we want to talk about today and bring it up. But that right there is just, I mean, it's the new frontier. And if we don't jump in front of it, once again, as a people, we're going to be left behind, not even knowing that the game is being played. What it say? You got the game that's basically going on. You got people that are watching the game, and you got people on the sidelines don't even know the game is going on, and that's where we are right now. So yeah.
I want to speak to that because we've all heard in the past of the consumer data, your buying history, your demographics, where you live, how much you make in income. And that's what large providers have typically bought bulk data, and they use it to target you with advertising. And now we have a lot of privacy policies, a lot of rules that you have to be willing to share your data for them to do that legally. This data infrastructure layer, though, it's a whole different ball game. It's almost like owning your own cell phone tower.
Mhm. Yeah.
Because if someone wants to bounce off your tower and you own that tower, then they're running through your service, or bigger companies are overlaying their service on top of your infrastructure. So that's what we're talking about, the infrastructure layer. Can you own it? And there are opportunities out there. We won't put it all out in public yet, but there are opportunities out there where you can actually own the infrastructure, put it in your house, put it in your business, and now you're making money on people, or making money for providing that data layer service, because they're routing to your infrastructure, utilizing your service, and then paying you for it. And so that's an opportunity that we need to think about. A lot of times we just think about consuming. We get so caught up with the hype of AI. We get so caught up with the top layer of, I want to create graphics, I want to create an ebook, I want to do all of these things. And Kyle, really, and I know they're gonna be mad at me, but they'll go take an AI course from an influencer and then want to create AI businesses, helping other businesses, and charge them $5,000 when you could own a piece of infrastructure and make millions of dollars.
Yeah. Yeah.
People want true passive income. It's not passive if you're just creating for another business. And you got to be realistic. Most small businesses don't make enough money to pay you $5,000 a month to create AI content for them.
Right.
They don't even have that money.
Right.
Most big brands that do have the money, they're gonna hire somebody in-house and they're gonna use the tools themselves. So you becoming an AI expert with no background in tech,
Right.
no background,
Right. Right.
think that you're gonna create a career out of what an influencer told you. Now, I'll say this. Can you make some money somewhere? Yes. There'll always be some opportunity, somebody that'll pay you. You will make some money, but you won't build a legitimate business.
Right.
To your point, Kyle, I just built an entire website in 30 seconds. 30 seconds. I
And
tell you exactly how I did it.
but never
I
think
went to
about this. How much would that website have cost in 1999 that you just built
Oh,
in
30
seconds?
grand. And
30 grand.
it's people charging 20 grand now for websites. You could get
Wow.
one for like 3 to 5 thousand if you find the right people, 1,800 if you go it offshore. But I just went to Claude, mocked up, told it, kind of gave it what I wanted, some visualizations from some other sites. It gave me what's called an MD file. I took that file, went to go high level, and dropped it in the AI studio, and bam, popped it right up.
Wow. Wow. Imaging and everything.
Imaging and everything.
Wow. Wow. Wow.
You now, is it gonna be as crisp as having a designer that's been doing web design for 30 years? Maybe not, but it's pretty clear. It's pretty close. And so, we're gonna get out of the consumerism, because those things you'll be able to do it yourself. You'll be able to just go in and say what you want, and the AI is going to be so smart, it's going to just output it for you. You don't need to pay nobody to do that. But at the end of the day, you still don't own the infrastructure. You don't own Anthropic. You don't own OpenAI. You don't own XAI. Like you have no ownership. You don't own AWS, where these things run off of. So you have to start thinking, where are the opportunities out there for me to buy into the infrastructure?
Mm.
And as we go along, and as we have more things, and as we get more clarity, we'll start bringing that to the table and sharing it with you, because there is opportunity for you to own the infrastructure.
Yeah. It's funny that when we talk about this, I remember, um, and this is kind of crazy, but back in when they were talking about 2021. Remember they were saying that's supposed to be the end of the world and all this kind of stuff because the Mayan calendar, was ended in 2021 and what was going on in December 2021 and it's going to be over because well, what's going on? Because the Mayan calendar said that was it. And what was crazy is that a lot of people, and again, I'm gonna go back to this, but I know some folks might not be thinking about it. But remember that song back in what the Fifth Dimension, that group, and they had a song called "It's This Is the Dawning of the Age of Aquarius." And what was happening is that that Mayan calendar that everybody thought was going to be end of the world, that was the end of I forgot whatever sign that was, but we were going into Aquarius, and Aquarius is about all of this, infrastructure, AI, technology. We're coming out of the industrial age that basically, and I don't, people probably don't realize when we went from the horse and buggy in the 1800s to, all of a sudden the industry and manufacturing and how that was a change. And now
Mm-hmm.
to
Mm-hmm.
the age of Aquarius, which is basically all of this AI and stuff like that and technology. So it's crazy, but it's real. And to understand that we are in a disrupt type of industry, everything's been disrupted. Think about it. When the car came, that was a disrupt to horse and buggy. You know what I mean? But what was crazy is that New York City needed that because all of that, horse pee and poop and manure that was in the streets, that stuff was crazy on a hot day like this. So they had to come up with something different. Well, guess what? Now we went from autos to now we're getting into electric cars. You know what I mean? That are not running on gas and autonomous vehicles. All of this is technology and this data. So again, things are changing. But if we could be thinking disrupt, this is a disrupt opportunity. Who would have thought that Uber and Lyft, all of these companies, that what do they need? Data. They killed the whole industry of what cabs. You would have thought that billboards and things like that. That back in the day we were writing. Now you got websites that are basically designing. Who would have thought the way television back in the day? And I'm talking about what from the 50s of being television being invented to black and white to having color to now we don't even use the television. I haven't had cable in 6 years. Disrupt. But what am I doing? I'm using streaming. I need what? Data at all of my TVs on my computer. I need data. I got a gig coming off of ATT, coming right off the node, coming right into my house. Guess what? We paying I don't know how much, $80, $90, whatever. I ain't never got a gig. I ain't never got a gig. Coming off of ATT saying that, oh, we're gonna give you a gig, and we pay for it. Guess what? We don't complain every month. We don't send the tech out here, but I've never got a gig. And that's what's so exciting about where we are right now because we ain't complaining. As long as the computer's working, we're good to go. As long as we're getting, it's buffering, but as long as I'm getting streaming service or whatever. But we're in an age right now where we have to understand, stop being the ultimate consumer and start getting some ownership and get in the game. How do we partake in it, Tyrus? How do we play? How can we be earners, not just users?
Yeah, I think that's you've said it, and you've said it 1,000 times. Is opening your mind. Is thinking bigger than just the I want to do this thing, and I want to just jump on the create. Like I look at social media and I watch every time a new thing happens. Oh, put in this prompt about yourself and see what AI, and everybody's posting their picture that AI put out of them. Everybody's posting what AI says about them, and they get excited about that. But nobody's asking the question, how do I create some ownership here?
Right.
And then I think, with fan base and Isaac Hayes III and his whole thought process of, you know, we're the talent, if you will, on social media, but we don't own the platform. And if Facebook can pay an influencer $10 million a year, How much money is Facebook making?
Right. Right.
But you don't get, and even Country Wayne on the podcast with Earn Your Leisure talked about that. He was like, I'm moving to the stage of where I want more ownership. See, it gets to a level of, okay, I'm making a lot of money, but now I'm realizing I don't own this thing.
Hmm.
And they could take it away from me when they want to.
Right.
Now they start moving into, I need to own more things. Alex Hermosi, Gym Lodge, consulting. Then he moved into buying,
Acquisition.
private equity, because now he's realizing, oh, I'm doing this for a service fee, and that's all, but I don't own it.
Right.
But as I built up something and sold it and saw the power of an exit, I need to own more. So, as what we have to do is start thinking about sooner, how do we get ownership, not later.
Hmm.
Even NBA players, athletes, entertainers, they go so far in their career, then they start wanting to own things. The smarter LeBron James was different. He
Right.
came in with a I want to own these things mindset.
Right. Right. Right.
Magic had to go through a career and then come back and get seated at a table of ownership.
Right.
We need to do it earlier and earlier and earlier. We need to start teaching our children the
Hmm.
value of ownership. I saw a guy, his name is Carl. He posted today. He runs a youth entrepreneurship program. I volunteered at one of his events, and he's doing a phenomenal job. He said we need to start teaching ownership at 12 years old, not 22 years old.
Yeah. Yeah.
And that's how we get in the game, by teaching, okay, you need to own the actual parts of the infrastructure that you're using. We need to take it a little bit further than what Wall Street Trapper talks about. He says if you're using these products, you should own shares in the company. I agree. If you're
Right.
gonna use it, you need to have some share ownership. But the ownership that you have in the stock market is so small. Yes, you own it, but you don't own it.
Right. Right. How much of Disney can you own? You know, I mean, how much shares can you buy in Disney? Yeah. Exactly.
And so we need to, now that moves us to the conversation of, we know that they're moving the signals. They're going from big data centers to how do we put it in your house? How do we put it in your laptop? And when they're saying, how do we put it in yours? You should be saying, how do I put it in my own?
Hmm.
How do I create my own? How do I become a AWS, Azure? How do I become a competitor? Because what happens? I'm looking at Anthropic paying roughly $400 million in stock to acquire a company called Coefficient Bio. If you become big enough, they're gonna buy you.
Yeah. 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 You keep scratching.
Or
You keep scratching that itch. They're gonna fix it.
they will utilize the service and pay you. You ever notice how Microsoft, they all claim, the competitors. Microsoft is a competitor to Apple, and Claude is a competitor to
Chat.
ChatGPT. But then next thing you know, you see them doing deals together,
Yeah. Work.
utilizing each other's stuff.
Yeah.
That's how business is done.
Every day. Every day. Every day. I mean, Ford was basically, he had to get tires from his buddy Firestone. A lot of people don't realize those are two people's last names.
Yep.
Those are two people's last names, Ford and Firestone. And look at that. That's what I want to be able to do. I mean, long after I'm gone, I want the name to live. I want my family's family. What's the good book say? Generational wealth. To your children's children. That's what Ford. That's what basically Hilton. That's what Firestone. That's what they've done. And we need to be able to do that. Stop being the ultimate consumer. I think we were so happy to be able to say, "Oh, we got some money, we could buy something." But think about it. People don't realize Mercedes Benz. That's two people's last names. Rolls Royce. That's two people's last names. And again, continuing to live on. And that's what we have to be understanding. Let's not be happy just being able to get in there, to the front door. Let's be happy to have a seat at the table, making decisions, and that's what
Bingo.
I'm excited about.
Okay. So let's change paces just a little bit. We're going to wrap this up with data centers are here. They're here to stay. Now,
Yeah.
where they're building them, there'll be arguments between states and cities and counties, but they're going to build them. When they start being able to get smaller and these companies begin to approach you about putting them in your business, your home, there's opportunity for you to do this yourself and make the money off of it yourself. As this opportunity unfolds, we will bring that back to the forefront so that everybody has the opportunity to get in on the ground level. Because we believe in ownership and we want everyone to have some sort of just an option to actually own it and not just consume or use it. SpaceX, they're getting ready to go. I got people emailing me asking me what I think about SpaceX. I said I think it's gonna make a whole lot of people a whole lot of money, but it's not gonna make the people who go buy tomorrow money.
Now look at what we have. Look, this says follow us on Zero to IPO. Follow us on Zero to IPO. And here it is. We try to share with you every week we're on here. We try to share with you about understanding the IPO. And this is probably one of the biggest ones that's coming out. If you're not paying attention to what's going on, I'm hearing what, $135
135.
a share coming out. How much do you think people were buying that stock for when it was just shares? I don't even know if they're putting that information out.
I don't know. I
Um,
don't know.
Elon Musk was selling that to his boys.
But let's talk about it. Let's talk about it because people are asking me, they're sending me emails, asking me what I think about SpaceX IPO. Are you gonna buy some? Nope, not buying none.
Not
You
now.
know, not right now. Because, and let's be realistic.
Yeah.
Now let's use some math. I'm gonna bring my calculator up so we can use some math. So SpaceX is IPOing, debuting at $135 a share. We know with the hype and all that, it's gonna go up. It's just gonna go up. That's what it is.
Right.
If you had $10,000 at $135 a share, how many shares can you buy?
So what is that? 130? 130, what, $10?
So $135, $10,000 worth of 74 shares.
Right. I mean, goodness gracious.
So you got 74 shares. Now, let me make sure I did my math right. 74 and some change. 74 times $135. Yeah, 9,990. So you got roughly 74 shares.
For 10,000.
It might top out at, and we're just guessing. This ain't no legal advice, no financial advice. This is just wild guesses. We don't know.
We're not
I ain't
broke.
even following it like that.
We're not IRAs, right?
Let's just say it goes from 135 to 150. Well, if you bought 74, you got 74 with your $10,000. That's 11,100. You made $1,100.
$11.
Now, those people, though, and this is why we're telling you that it's important to be a part of the conversation early. It's important that for you business owners out there to structure your company properly, where you can take your company public too, and you can build up an exit or go public an IPO. But let's just say we don't know. We know Figma, when they first started raising capital, it was around 9 cents a share.
9 cents.
So let's just throw a number out there. Let's say that Elon started raising at $5 a share.
That's what I would say.
Let's just say $5.
Right. He got that kind of stigma. He can say that.
So if you had $10,000 at $5 a share, you got 2,000 shares. Now, if you IPO If you sell your shares when it IPOs to all these new market buyers at $135, you made $270,000 off
Right.
a $10,000 investment.
Let's make sure everybody understands that. So how explain to everybody how are they selling their shares at IPO and how they get it at $5? So we said if you could buy it at five, but how did they get it at $5 a share? Let's make sure everybody understands that.
Yep. So when a company is private, using certain exemptions, they can raise capital. And depending on what exemption, you can raise capital from accredited investors, you can raise capital from non accredited investors, depending on what exemption that you raise under. And when a company's newer and is just starting, the value is lower, the valuation is lower. So when they raise that initial capital, being pre revenue or early stage, they're raising it pennies on the dollar. 9 cents, 10 cents, 20 cents, 25 cents, a dollar, $5. And as they go through different rounds, that raise amount changes. I started at a dollar a share. Next raise I do might be $5 because you're showing forward growth. You take that money, you put it back into the business, you actually use it to grow until you get to a stage of where they value that company and say, you know what? We believe you can IPO now at $135 a share. Now, everybody that bought in at the $5 mark, the $1 mark, they just waiting
Wait, like Thanksgiving, they just wait.
because the initial people that go and buy at the IPO, they're buying the shares that the people who were early investors are going to drop in the market.
Mhm.
Now, there are some restrictions depending on the exemptions and depending on how you got your shares. Some people may not be able to sell for the first year. They may not be able to sell for 6 months. It depends on all the restrictions. But there's going to be some multimillionaires and billionaires made. These funds, venture funds that invest in these companies, they buy thousands of shares.
Mhm.
They buy millions of dollars of worth of shares to turn into billions. We're going to see it. They're going to list the biggest winners.
Oh yeah, you're gonna yeah. We're
They
going.
already they already said for the employees, the early employees, one of them, I think employee number 10 has $35 million worth of shares
Mhm.
as an employee. See, if you work at a job, I'm talking to my 9 to 5ers, get with you a company that's going to give you some stock, so some options, something.
Exactly.
So when that company exits, when that company goes pub, when that company does whatever it does, you see some upside. We just working and don't have no ownership.
Right. No ownership. All we do is work for a paycheck. We're doing linear income. That's it. Trading time for dollars. Don't even know how valuable your time is. Trade time for dollars. And what's really crazy about this is that if the richest man in the world, two things about that. The richest man in the world, first of all, is raising capital. Now, people should be scratching their head on that. That's kind of like you see it with your eyes, but you're not really listening. Your eyes is telling you something, but you're hearing it, but it's like seeing is not believing. The richest man in the world is raising capital. That should be a sign to every business owner out there. Why are we not raising capital? I'm a business owner. Why am I just solely dependent on the bank and getting loans and SBA and things like that? When the richest man in the world, he ain't getting grants, right? He ain't going after credit, bank credit or whatever.
Pitch competitions.
Right. Yeah,
Pitch competitions.
right. Raising capital. That's got. I don't understand why folks just don't get that, especially us. You've got to understand that. You've got to pay attention. Please start paying attention.
Kyle, walk that back one more time because I know I walk it back one more time. The richest man in the world is raising capital. Most of all these companies raising millions of dollars, millions. They're going to IPO raising billions of dollars.
Raising capital.
Yet we want to go to the bank, get denied. We want to put on social media that, don't get me wrong, I believe there are places for each one of these in the capital stack. But to put, like I see on Instagram, or I see more on LinkedIn, not Instagram, people that show their, oh, I won $10,000 in my pitch competition. I won $5,000 in the pitch competition. Why you keep pitching? Because it's not enough money.
Right.
And you feel great about going to a pitch competition and winning $5,000 when you could take that same pitch deck, possibly get the right exemption, and go raise from investors
Right.
so they can put some legitimate money in your pocket, so they can write you $150,000 check, a $200,000 check. With a regulation CF, you could raise up to $5 million in a year utilizing marketing from both accredited and non-accredited investors.
Right. And I think people need to hear what you just said. A year, $5 million a year. Is everybody getting that? You can rate with the right, basically put together. Your make sure you have the right financial instrument. You can raise up to $5 million a year. So you got to be Elon Musk, but still get into the game, raising money. How everybody have this business owner? How much could you do with $5 million? Not that you had to come up with yourself. That people bought into your concept and your idea because you thought it was so good. What could you do with that? Crazy.
When we think about it, and I don't understand it. I do understand it. I don't understand why we are so apt to change, though. We want grants. We want free money. That, I think, Kyle, that's the key. I think it just dawned on me. We're so busy chasing free money. We want grants. We want to win a pitch competition. People are so tied into, now they'll go take debt. They'll take a debt out and then can't pay it and go out of business. But people believe that they have to own 100% of their own business. They believe that. They just believe, I can't, I got to own all of it. I can't give up any of it.
Right.
There's no billionaire on the planet that owns 100% of their company. Most of them don't own 9% at this stage.
Right.
They own 9, 5, 10% of the business, but they're billionaires. At some point, we have to get out of the mindset of, I don't want anybody else having ownership in my business, because that limits you and traps you. And that's why we never see a lot of businesses, especially small service businesses, reach that $10 million mark and beyond, because they're so stuck and they're chasing the free money. Well, if I go get a grant, it's only so many grants out there that you're going to get. And that money evaporates. I mean, 20K, 50K evaporates. You got to have, if you're trying to build a business, significant amounts of money, especially if you want to compete, if you want to take over market share, if you want to do all these things to grow, you got to have capital to do that. And again, it's very point to what we started with. Data centers, infrastructure, AI. On the consumer side, you just want to go be a part of the fun and play around with the graphics and the images and all that stuff. It's the same thing with the stock market. Instead of owning, creating value in the company, forming it right, structuring it right, raising capital, selling off share, or in the beginning and then taking it public and it becoming stock. Instead of doing that, we just excited to be a part of SpaceX IPO so we can go buy 10 shares.
Right.
Just, we can go buy 10 shares.
Right. And you know, it's funny because, I remember, guys were always talking to Sean and I saying, yo, man, you guys need to get into Forex. You need to get into Forex. Oh, man, Forex. And I used to be like, why? Like what? Oh man, that's the hottest thing popping right now. Kyle, I'm making 2 grand or whatever, with my forex trade. And I'm like, why? People, oh man, look, I'm day trading. I'm day trading, man. The candles are moving or whatever, and I'm making big. And I'm like what? We create that. We create that. We show you how to be instead of worrying about what the candles are doing. We show you how to be that company that's the candles are moving up. That's where you over to going there, whatever. It doesn't matter because as long as you're in it, what I mean. You're in it, and now you make your company worth something. Understand, it's your business, and for you to I hate to say it, but you just got a job. That's all you did. You created a job. You just got another job that you created. You bought. You spent money, whatever. A job, and now you're giving 18 hours, 20 hours, of your day, killing yourself with a job. Learn how to raise capital. Learn how to basically get people excited about your business, your product, your widget, your gadget, your service, whatever it is. Because again, if the richest man in the world is raising capital, what is that telling you? Why don't we understand that? Why don't we realize it? Wait a minute, hold on. Why are we not looking at what our eyes and our ears are telling us? What is? Why are we doubting it? What I mean? We all degreed up. What I mean? But yet we're doubting what we're literally seeing and hearing right before our eyes. And what SpaceX is not his only publicly traded company.
Tesla.
So think about it. So it's like, oh, well, he just got no. He had other public traded companies, and Twitter or X was publicly traded. He took it away, but that was publicly traded too when he bought it. Is everybody getting that? There's something going on with this public traded stuff. Why are there only 6 minority public traded companies? What's going on? And why are we afraid to get into that arena?
Mm. That's really good when you think about it. And when you ask those questions, when you look at those individuals who have went public, a lot of them were a part of other companies that went public years and years ago. And they were talking, I've read some articles about how they've created this ecosystem of people who work for these companies. They're at the top 5, employee number 8. They go public, they spin out, they go start a whole nother business, build that up, take it public, spin out, start a whole nother business. And these guys are exiting with 20 million, 50 million, 100 million. Then they start investing in other businesses. So they know the game of they flipping.
Right. They flipping. They flipping. Not houses. They flipping companies.
Flipping companies. How do we get involved beyond the hype? And I just want everybody to take it as an opportunity to step your game up. Like, yes, it is beautiful that you get your feet wet in the stock market and you understand how to buy some shares or some stock in the open market when it's public and you understand that. But then take it a step further. How do you buy shares in a private company that's raising capital on an exemption? Take it a step further. If you're a business owner, how do you structure and build your business that people can buy and invest into? Don't just settle for the surface level, because to be honest with you, the surface level won't get you wealth. It just won't. It's not enough. Yes, you can invest in the stock market. Yes, you can buy stock. But if you're not wealthy, you're not able to buy enough. I don't know. I think it was somebody in Nike. No, it was somebody else, but they went and bought $2 million worth of Nike shares.
Wow.
That's going to move the needle a little bit.
Right. You got that kind of money. I said, wow.
But when you can only buy 5 shares because you only got $500, you're not going to create generational wealth with that. You're not going to move the needle with that. It's people who already have money that are able to put money into the market and see the big returns. And you don't just have to focus on the large cap stocks, because there are small caps, small companies. And when we say small, Small in this world is $100 million.
Right, exactly. Exactly.
$100 million company considered small. So get on the journey and don't just get the education. Start doing something and executing and working and walking this path. Because if we bring opportunities to say, hey, you can invest and buy data centers or invest to put a data center in your house and make money off of it, research it and take advantage.
Mhm.
If we're telling you how to structure a company, how to put together your documents, how to get the right exemption, how to do the right files, how to talk to the right attorneys, how to raise capital for your business, take that as an option. And then when you have this wealth coming in and you're having money coming from all kind of places, then you go drop a lot of money on a SpaceX IPO. But at that point, you wouldn't even want to do it because there ain't no wealthy people going to the SpaceX IPO. They
Right.
already in it.
They got it. They already got the shares. They're the ones that sell it to the people that are IPO. That's where the wealth is made. And that's what we want all you guys to understand. The wealth is made when the IPO comes out. What does that mean? Initial public offering. That means that they're buying shares. But where are they getting these shares from? They're getting them from the people that got started with Elon Musk when he first started SpaceX. Those people that invested in him, they bought shares. Now it's going public. That's called stock. And they're selling their shares to the stock market. And those people are going to be buying them up at $135 a share when they probably got them, like Tyrus said, at $5.
If not less.
Right. I hope y'all understand that because that right there, that was a lesson right there. And if y'all don't understand that, y'all need to join the Capital Raising Academy so we can teach you and share you what that means. You need to get on board Capital Raising Academy to understand what we're talking about today because this ain't the only time it's going to happen. I mean, this is a big one, SpaceX, but I get think about it. The richest man in the world. I'm gonna say that until this moon comes out again. The richest man in the world is raising capital. He's taken SpaceX public, and that's not his only public traded company.
Kyle, do me a favor, talk through that a little bit because I think that people may not know that going public, the IPO process is a capital raise for the company. Talk through that a little bit.
Right. So what happens is this: when basically you're looking at right now, it's getting ready to come out, and again, we're talking about at a dollar, $135. So now that that is coming out at 135, that means the shares are going to be valued at that. So let's just say hypothetically, Elon Musk has, I don't know, he probably got, let's say 100 million shares. So if he's got 100 million shares at $135, now you're hearing everybody that he's going to be the next trillionaire, right? Excuse me, the only trillionaire. So you do the math. I mean, 100 million shares at $135. That's where the wealth is made. Now, when we're talking about how you can make money, he's not making any money physically, but he's making money because what his shares are worth. Now he takes these shares and now he goes to the bank. He doesn't have an account with that bank. He doesn't have any money in that bank. But he literally can go to the bank and say, I want to borrow $100 million. I want to borrow $500 million or whatever. And they're going to look at that, turn around and check his account, whatever his transfer agent says, whatever he has, and they're going to be like, oh, okay, his Schwab account, his Merrill Lynch account, whatever account he has, oh, no problem. And they'll give him a loan against his what? His shares. And by giving him a loan against his shares, how much tax is he paying? Or how much in taxes? Zero. Because you don't pay taxes on a loan. And guess what? He has in there basically his stock and whatever is making money. So it'll be an interest only payment anyway. So his interest will be paying back the loan. That's where you can make money. Now, another generation for the money is basically if the stock goes down, then guess what? His shares he's losing, but yet still he's got money. Either way, but right now when this thing shoots up at probably I don't know $200, $300, $400, he's got the option to basically go get a loan. What would you do if you have four? Now you better hurry up because I ain't gonna stay up there long. I ain't gonna stay there long. And then when it comes back crashing down, it's probably gonna come back down. I say I don't know what, maybe 80, 85, $79 or whatever, maybe 65. Still, whatever comes out, he still has 100 million shares at $65 a share. Now that's just an example of it, and that's
That's good. And so it's the initial investors getting money. It's Elon Musk based on his shares, and then it's the company shares that are getting sold. So the company's bringing in revenue. Well, not revenue. They're bringing that in. So at this, it's in a liquidity event when you IPO. They're not just IPOing and other people get to buy and being part of the business. No, they're making billions of dollars are gonna change hands.
yeah. And now you got stockbrokers selling the stock.
Yep.
I mean, and as the stockbrokers selling the stock, they're out there selling it. So basically, he's putting stock out there, and more than likely, that stock that they're actually selling is probably Elon Musk stock. So he's giving his stock to the market to sell, and they're selling it. That's how it was with Bill Gates. Bill Gates had uh no wait hold on yeah Bill Gates, he had 1 billion shares. So when you were buying Microsoft stock, you were buying whatever Bill Gates was putting in the market. 1 million shares at a time, 1 million shares a month, or whatever. You were buying his stuff, and so it just kept going down and down and down and down. But he was just getting wealthy, and that's why he was the richest man in the world at one time. Now he only owns 1%. He owns 1% of Microsoft. But guess what? That 1% is still worth so much. He doesn't have all that he had before because you were buying his shares. But it's like it's mind-boggling if you don't understand it. Now, guess what? I don't want you to think that I went to the Wharton School of Business or I went to Duke or Harvard Business School or whatever. No, I didn't. Basically, I'm just, I'm a C student from New Jersey. Okay, guess what? I don't even have. I'm surrounded by tires and showing all degreed up. I don't even have a degree. You know what I mean? I quituated.
Quit you
I
waiting.
went to college, and once I went there, I'm like, hold on, wait a minute. You mean to tell me when I graduate from college, I'm going to be able to make how much a year? And they said, oh, well, you're going to be in aviation management. You're going to be able to make $60,000 a year. I'm like, where's the jobs for 60,000 a month? That's the one I'm looking for. So I quituated.
I hear that. All right, good people. As we wind this down, the overarching theme, whether it's SpaceX, whether it's Anthropic, whether it's OpenAI, all them guys are gonna come. They're gonna come boom, 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 public, down the street, down the
Oh,
road.
and OpenAI, he just registered for his IPO.
Yep, they coming. They are coming. And
Yeah.
that's what we were talking about last night when we said, in 2021, that IPO hit up. It had been low. It jumped. This is between 2026, 2027. Boom, it's going to go up again. So the the theme of this entire conversation, whether it is SpaceX IPOing, whether it's data centers, figure out how you can become an actual owner of infrastructure, an owner of your own company that's on the trajectory to go public, or even get acquired and build for that. If you build for that, you'll be able to experience a liquidity event. It might not be billions and billions of dollars, but it sure will likely be more than a paycheck, which is what you're getting right now. So think that through. Now, if you are in and around the Atlanta area,
Yeah.
on July 18th, we are hosting an event at the Total Wine and More in Acres Mill in Atlanta, Saturday, July 18th at 2 p.m. You can scan that QR code. You can go to the website legacywealthcapitalgroup.com/ATL event. Join us. We're going to talk about the private side of capital, what growing businesses need to know. A lot of what we cover here and much, much more on how you actually grow and scale the business. So around the Atlanta area, If you feel like traveling down to Atlanta area, that's where we'll be on July 18th, 2 p.m. Total Wine and More in Acres Mill. So we really want to see you guys join us because we need to start actually getting in the game. We're not in the game. We're far away from the game. We don't understand the game. We have more excuses about the game. We're mad at the game, whatever. Here's an opportunity for you to get in the room with us and other like minded business owners and start to actually chart your path to success. So, what they used to say, don't meet us there, beat us there. So July 18th, we'll put this out on social media all over different places, and we'll continue to remind you guys all the way up until that day and time comes. So wanted to put that out there for you all.
I'm looking forward to seeing you. Actually, what because times what seating is limited, right?
Yeah, seating is limited.
Yeah, seating is limited. So
So sign up, register. Once we hit capacity, no more registrations will be accepted.
well,
So make sure that you go ahead and register and get in there. All right, good people. We're gonna get out of here. We've been live for almost an hour. We're gonna watch the market over the next couple of days, see what SpaceX IPO really does, and then see all the people who try to get in the market. I have my predictions. And if you look at any company that IPOs, there's some ebb and flow. It goes up, it comes down, it goes up, it comes down, and then there's a great time to buy. I'm not gonna buy any tomorrow or the next day or whenever it goes out because that's just not the best time to buy. So not you'll have many people buy though, many people just to say they own a little bit of SpaceX.
yeah, history's
You
gonna
gotta
be.
want more than that.
Yeah.
Gotta want more than that.
Guys,
Thank you for joining us.
I was trying to show you more of my black hair. That's what I was doing.
Oh Lord, we out of here. Kyle don't want to go gray, but it's inevitable. It's done. Thank you for joining us. We will see you all next time around. Have a great rest of your evening.
Thank you so much, guys. All right.